Hello to all traders and welcome to another edition of Stock Watch, the final Stock Watch of the trading week. And we're looking at the US indices today after they've recovered somewhat from quite a heavy losing streak. And the last few days we've seen basically three bullish candles to the upside, which has given us a bit of a cause for concern for bears, but not for bulls especially. So traders and investors alike are digesting a lot of information coming out of Ukraine and Russia. And also we're seeing that the FOMC meeting on Wednesday was kind of priced in from the beginning of the year. It wasn't really a shock as such that the Fed was going to raise their hike the rate, by 25 basis points or a quarter of a percent, and this was basically a non-performer for the Fed. So we'll see for the next Federal Reserve rate hike, if it's going to have any big impact on the market. But for now, if we're focusing on indices, the Dow, Nasdaq and the S&P all rose by over 1% in yesterday's trading. And the big performer on the Dow was American Express, as that was up by 3.5%. Due to the fact that Bank of America will keep its buy rating on the stock. So when we're looking at indices performing, just be aware of the big performers, the heavily weighted stocks in the indices, because obviously if they're on the move, then the indices will be affected greater. So we're looking at, again, as I said, the Ukraine crisis rumbling on, and we're just waiting to see what's going to happen with that. But in the meantime, as I say, the stocks were rallying yesterday and for the last few days. So if we just look on the daily chart on the Dow Jones first of all today, as you can see here with my bad writing there, we're seeing now this nice bullish momentum after hitting some support on the Dow. As I said, going over nearly 500 points from when it was actually, in yesterday's session, and from when it was actually at a bottom over 1,000 points as well. So quite a good rally there. What I'm looking at the moment though is the fact that this is on a daily chart. We're just looking at this Ichimoku cloud indicator because it's very, very thin, and it just signals to me that it can be easily broken, and another move to the upside is, you could say, more or less on the cards. It's more likely, but obviously keep in mind that if we keep moving higher on the RSI, we could be in for a bearish divergence that could bring prices lower. But on the 4-hour chart, there's a little bit more clarity. If we're trading intraday, I'll just remove these drawings just for better clarification. And if we're moving a little bit to the upside, as you can see, we've broken the Ichimoku cloud now. Prices are very overbought on the RSI, so we are expecting a slight leg to the downside in the near term, but then this could actually just be like go lower a couple of legs and then another push to the upside. So for the Dow, it's pretty much the same for the S&P as well. We're seeing now, I'll just put it onto the daily chart. So the last time I looked on the Dow, the S&P, as you can see, we're going in a descending channel, and we're expecting prices to start pushing lower. However, as you can see, we've spiked out of this descending channel and going to the upside now after quite a good rally, as I said, over 1% in yesterday's trading. And as you can see, a little bit like the Dow, three very, very bullish candles to the upside, indicating that we could be looking at these further tops in the near term. On the 4-hour chart, we can see also that, again, we're hitting this double top here, you could say. If we break through this, then expectations are that we are looking at the next level, roughly around the 4,500 area. On the RSI, not too much in the way of divergences. So I'm just waiting to see what the next level up is, and if we're going to have another move to the upside or downside. So it'll be very interesting as we head into the weekend. And obviously be careful for those weekend gaps, as there's a lot of volatility on the weekend due to this Ukraine-Russia crisis that keeps on going, unfortunately. So that's all from today's video. As usual, this video will be posted on our YouTube channel, so any comments or queries, please feel free to add them, and I'll get back to you as soon as possible. Have a great trading day ahead, a great weekend ahead, and bye for now.